Hey, what's up, guys? Hope you all are doing good. I'm doing well. In this video, I'm going to talk about the mistake that I have made while investing in this portfolio, as well as I would want to consider one opportunity and that I want to share with you guys moving forward for the next year to come. So if you're interested in these two topics, stick around and you won't be disappointed. So thank you guys for tuning in. I wanted to share this portfolio update as well as talk about the mistake that I have made in this portfolio. Currently, my portfolio is at $186,600. Year to date, I am down 4.5%, which is $8,800. But if you look at the last 3 months, I'm down almost 7.5% or $15,000. So 13,300 after today's gain, of course, right? So today I'm up $2,800. Again, like these kind of gains happen when the market is going down. We make low highs and low lows. So this was expected pretty much, and that is why I've been selling cash secured puts and covered calls. But wanted to talk about the mistake that I have made, and I want you to avoid this mistake. So the mistake that I made was I had roughly $25,000 in cash that I use to put 9 contracts of SOXL. I opened 9 contracts for SOXL at $22 strike price. But what happened is my contracts went in the money. What that means is now the price of SOXL, if you look here, is less than $20. So if the date comes, which is April 4th, I would be buying 900 shares each at $22 per share when the cost is $19.40. Basically, this is how you get in the money. So there are two things that you can do to avoid this. One is to roll the options, and that's what I did. I initially opened a contract at $25 strike price, but then I have to roll the 1 month out to get some premium and make $22 as my strike price. But even this has gone in the money now. So what I'm seeing here is that around in 3 more weeks, I will be executing this. These 9 contracts are gonna get executed. So the problem or the mistake that I made is I put all the money down. So all the money that I had, $25,000, I put that for selling cash secured puts. So you should not be putting all the cash in one trade. This is a very basics of selling cash secured puts and covered calls, but options overall. You don't go all in one trade. But I was comfortable because I see an opportunity with SOXL. SOXL is basically semiconductor 3 times leverage ETF. What that means is it allows users to get the gain and multiply their losses as well in a downturn of 3 times the stocks that move. So the biggest holding SOXL holds is AVGO, which is Broadcom, then Nvidia and AMD, and all others are all semiconductor stocks that you can think of are all held in SOXL. So that was the mistake that I wanted to highlight. So never go all in. So if you have $25,000 sitting in on the sidelines and you want to sell cash secured puts, you should go with maybe 20,000 or 18,000 to basically sell cash secured puts. And if you see a pullback, then you can invest more. But what I did is when I rolled these $25 strike price contracts, which I had, I rolled them to $22. So basically, gained back $3 per share for 900 shares. So I released some of that cash going 1 month out. And that is why, like, how I save myself. This is how basically I wouldn't call it saving myself, but it's something that I made money with, right? Like I got back my money and that I initially put for $25 at $25. So And now we're on selling at 22. Current price is $19. If it were to execute today, I would have been willing to do that because I can sell covered calls right away on these 900 shares. But I'm not gonna do that. It's the expiry date is April 4th, so I'm gonna let it expire then. Or if it does execute in the money, I'm okay with that as well. Now, the second thing is I wanted to showcase my portfolio, what it has been through over the past 3 months. So, on February 19th, my total stock portfolio value was over $204,000. And look at it now. So, I'm down almost $18,000. This is including the 2,000, 3,000 plus gains that I have seen today. And so if you take that out, I'm down almost you know uh, 20 plus $1,000 uh, for just few days from February 19th to March of 14th. So just in 4 weeks, I am down almost $20,000. But I do see an opportunity here. What I'm gonna do next is to talk about the opportunity that I discussed in the introduction. What opportunity do I see here? So as you know, QQQ is one of my biggest holdings here. What QQQ does is it is tracking NASDAQ 100 index, and it is an ETF for that index. If you look at it, it is down from all-time high of $540 to now $477. It is already in its correction. Basically, correction happens when the stock or an ETF goes down 10% or more from its recent highs, which was $540. So now 477 is correction for QQQ or Nasdaq within 3 weeks of time, right? So what I'm gonna do is I will wait for this to go down a little bit more because that is what is expected in short term at least. Um, People are blaming Trump administration and the tariffs that he's imposing and all of that. So economy is bit shaky, and I think in the short term, from 3 to 6 months, we can see more pullback because the stock market was ready to for a pullback because it has been at all-time highs for last 6 to 8 months. So when that pullback happens, what I'm gonna do is I'm gonna buy some TQQQ, which is right here. TQQQ is the leverage from the 3 times leverage of QQQ. What it means is it sees swings like this. So from $49 in April 2024 to 80 almost $85 in July 10th of the same year. So within few months from April to July, within 3 months, it can make you this big of a move and this much money, like almost $40. So that is what is expected. So if you see from here of $90 high, this went down to what it is today is at $60. So what I'm gonna do is I'm gonna get some of TQQ again when we see little more pullback, and if it doesn't happen, it doesn't happen. It's like we're not waiting for this to happen, but if it happens, then we can buy at a lower cost. So my cost base is currently for one share that I bought is $37. I'm not expecting it to go this down, but around $40-ish, around high 40s. If it goes below $50, I'm gonna start raking in some of this shares. So TQQ is on my watch list. A big fan of Q, triple Qs, and technology industry. I work for technology industry, and I'm definitely a big fan of it. And I see the AI and all those, how it is gonna change the future in all aspects, from farming to technology, how we do accounting, to education, everything is going to change with technology in coming years. So that's why a big fan of QQQ. And when there's a downturn, the triple leverage stock goes down significantly, and that's when you pick up and ride the highs when the market correction when the market goes up. So that's about it. These two things I wanted to showcase. I wanted to get back to you guys after almost a week time. So thank you guys for watching, and if you are still watching, I really appreciate you. Thank you for sticking around, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.